Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are. And Happy New Year, January 1st, 2020, the first day of the new year. Chainalysis claims, contrary to reports, fake volumes went down in 2019. If you were about to write off 2019 as the year of fake volumes, hold up. Cryptocurrency exchanges were at the center of the market, and not because of external agents funneling funds and hacks. Although the year did see a great deal of it, 2019 saw exchanges create problems of their own, with several reports detailing the severe manner by which exchanges were misreporting their trading volumes. At the beginning of the year, studies by Bitwise Asset Manager, the TIE, and the Blockchain Transparency Institute revealed the true nature of the crypto exchanges. The headline-grabbing report from Bitwise stated that over 95% of all exchanges were faking their volumes, a figure that did not decrease with its second report published 6 months later. Moreover, Bitwise reported that some exchanges picked up on the trading histograms of clean exchanges and began manipulating their own charts to look the same. One would think that 2019, a year when the price swelled and institutions arrived, would have seen greater fake volumes, but the crypto winter of 2018 took the lead, according to Philip Gradwell, the chief economist at Chainalysis. In an exclusive interview with AMB Crypto, Gradwell stated that in analyzing on-chain data to study fake trading volumes began the 2 years 2018 and 19, and the latter saw a decrease, he stated. At Chainalysis, we use on-chain data to assess fake trading volumes and found that fake volumes declined in 2019 relative to 2018. Delving into the Bitcoin price and commenting on its 92% increase, YTD, Gradwell stated that again on-chain data served as an important source of truth and about the markets. Transaction fees have been decreasing since the price eased off, settling between the 7,000 to 7,300 range. The fee dropped below $1 during the close of November and now stands at 0.394. The average median transaction value is now standing at $33, dropping below $100 per transaction in November. Next, we have China enacting the crypto law in a run-up to state digital currency debut, and China has formally implemented a law governing cryptographic password management as part of its pre-release plans for its central bank digital currency, the CBDC. As English language news, media outlet China Money Network reported on January 1st, the latest regulations have become legally binding following their unveiling in October last year. As Cointelegraph reported, the Standing Committee of the 13th National People's Congress in China passed the crypto law on October 26th. It divides passwords at large into 3 distinct categories: passwords, common passwords, and commercial passwords, and aims to facilitate China's transition to blockchain technology. In order to prevent data from being tampered with, it is necessary to protect each data with a password. The development of blockchain technology cannot be separated from the progress of cryptography technology, China Money Network wrote, referencing a report from Japanese media outlet Japan Economic News. China has not yet set a formal release date for its CBDC, which will be the first state-backed cryptocurrency on the world stage. Late last year, the People's Bank of China, PBOC, confirmed it would start live testing of the currency with select banks before 2020 began. Beijing's sudden public praise of blockchain more broadly sparked a wave of enthusiasm that ricocheted across cryptocurrency markets. The BTC rose, while China-based altcoins delivered considerable growth over a short period. At the same time, state-controlled media stressed that the endorsement was not tantamount to authorities slackening the strict ban of cryptocurrency trading in place since September 2017. But to add to that, we do know that Cambodia is already using them, as we've stated here and shared on our channel and on our Twitter with the BIS having stated they've had great success. So China will not be the first. Cambodia's already beaten them. High-profile crypto interview. Bitcoin supporter and SEC Commissioner Hester Peirce ends the year with the most popular ICE podcast. I'm not going to go into all of this. I'm just going to go into some of what she wrote. As long as these investors decline to enter the Bitcoin market because there is no efficient vehicle that would reduce the cost of entry, the features of Bitcoin market that caused the commission concern are likely to persist. I wanted to see at the SEC a much more open attitude toward innovation paired with a very clear message to investors that just because we let something trade in markets doesn't mean we're telling you it's a good idea for anyone, let alone you. So be skeptical, ask your own questions. We'll get you the information you need to make decisions, but you've got to make your own decisions. So that's my view. Let's let innovation happen and let's let the market test products. If the market likes them, they'll succeed. If it doesn't, they won't. China to cut reserve ratio by 50 basis points from January 6. China's central bank said Wednesday it will cut the amount of money banks will be required to have on hand from January 6 in an effort to boost the slowing economy. The People's Bank of China, PBOC, announced that the reserve requirement ratio for financial institutions will be lowered by 50 basis points. The official Xinhua news agency said that step will release about 800 billion yuan or 114.6 billion USD into the economy for lending purposes, delivering a shot in the arm to the economy ahead of the Lunar New Year that falls on January 25th. China's most important annual holiday is a time when companies and individuals typically need large amounts of cash on hand to pay bonuses, clear debts, and cover other expenses. However, Xinhua quoted an unidentified central bank official as saying that Wednesday's move does not presage a large-scale government stimulus program, ruling out the possibility of a flood-like flow of fresh money. The stance of prudent monetary policy has not changed, the official was quoted as saying. Beijing has adopted a string of market opening measures and tariff cuts meant to help revive economic growth that slowed to a 3-decade low of 6% in the latest quarter. While the trade war with the U.S. has been a factor, more worrisome is flagging demand for autos and apartments and the continuing dominance of state companies sustained by generous government subsidies and preferential policies. We're going to finish off this video with XRP price stable as XRP unlocks 1 billion tokens from the escrow wallet. Ripple, the blockchain payment network notionally tied to altcoin XRP, has begun 2020 by releasing funds from its escrow worth $192 million USD. Data scanned from the XRP blockchain by monitoring resource well alert caught the latest consignment of XRP tokens, which forms one installment of a pre-planned release schedule Ripple began in 2017. And I did get the alert as well this morning. In a blog post at the time, officials explained that they would look up 55 billion XRP, releasing funds each month over 55 months. The reason they said was to incentivize investors to keep interest and usage of XRP consistent. We use escrow to establish 55 contracts of 1 billion XRP each that will expire on the first day of every month from months 0 to 54. As each contract expires, the XRP will become available for Ripple's use. Ripple continued, you can expect us to continue to use XRP for incentives to market makers who offer tighter spreads for payments and selling XRP to institutional purchasers. Prior to this scheme beginning, Ripple was selling around 300 million USD in XRP each month. However, in 2019, sell-offs noticeably intensified, with Ripple disposing of more tokens last year than any other. The escrow movements have further failed to stem a dramatic decrease in the price of XRP relative to both Bitcoin and the US dollar. As Cointelegraph reported, XRP USD fell to more than 2-year lows in December. This week, meanwhile, the Ripple Chief Technology Officer David Schwartz, also known as Joel Katz, claimed that XRP purchases did not actually make Ripple any richer. At the same time, he described the company's sell-offs as negligible. XRP barely reacted to the escrow release, steadying at just above 19 cents USD, while other major altcoins fell by around 1%. Alright guys, that's going to finish up the articles for today. Again, we're not here for financial advice. We're just here for entertainment purposes only. Wishing you guys much love in the new year of 2020 and hoping you have a very prosperous year. We'll catch you in the next one.